Question 1. The property owner, Mrs. Thompson, has a general liability insurance policy that includes coverage as bodily injury and coverage B, personal and advertising injury. During a neighborhood gathering at her home, a guest trips over a broken step on her porch and sustains a serious injury. The guest sues Mrs. Thompson for medical expenses and damages. Which of the following statements is true regarding Mrs. Thompson's coverage under general liability insurance? A. Mrs. Thompson is fully covered for all medical expenses due to the guest's injury. B. Mrs. Thompson's policy will only cover damages if the injury was intentional. C. Coverage B will cover the legal costs associated with the lawsuit regardless of the outcome. D. Mrs. Thompson's policy may provide coverage for the medical expenses but not for punitive damages. Answer: D. Explanation. Coverage under general liability insurance typically covers bodily injury claims resulting from the insured's premises or operations. However, it often excludes coverage for punitive damages. While coverage may cover medical expenses incurred by the injured guest, punitive damages, which are meant to punish the wrongdoer and deter similar conduct, are not typically covered under standard general liability policies. This distinction is crucial for property owners to understand, as they could face significant out-of-pocket expenses if sued for punitive damages that exceed their policy limits. Question 2. Mr. Garcia is an independent contractor who performs home renovations. He has a professional liability insurance policy that includes an occurrence coverage form. During a renovation project, he incorrectly installs electrical wiring, leading to a fire that damages the property and causes personal injuries. Mr. Garcia's client seeks compensation for these damages. Which of the following statements best describes Mr. Garcia's coverage under his professional liability policy? A. The damages will be covered as long as the incident occurred during the policy period. B. The policy will not cover the damages since they arise from a contractual obligation. C. The client must file a claim within 1 year of the incident for coverage to apply. D. Coverage is contingent upon the claim being reported to the insurer during the policy period. Answer A. Explanation. Under an occurrence form of professional liability insurance, coverage applies to any claim for damages that arise from incidents occurring during the policy period, regardless of when the claim is reported to the insurer. This is important for contractors, as they might face claims long after the work has been completed. Option B is incorrect because professional liability insurance is designed to cover claims arising from negligence in the performance of professional services, not limited to contractual obligations. Option C is misleading because there's no standard 1-year requirement for filing. A claim of the coverage period is dictated by when the incident occurred. Option D misrepresents the occurrence policy, which does not require claims to be reported during the policy period for coverage to apply. Question 3. Scenario-based. During a winter storm, Mr. and Mrs. Jenkins' car skids on an icy road and collides with another vehicle. The Jenkins have an auto insurance policy with both collision and comprehensive coverage. After the accident, they report the incident to their insurance company. What should the Jenkins do to ensure a smooth claims process? A. Immediately repair the vehicle before the adjuster assesses the damage. B. Gather evidence of the accident, including photos and witness statements, and submit a claim form promptly. C. Wait for the other driver to file a claim before contacting their insurance company. D. File a police report only if the other party insists on it. Answer B. Explanation. To ensure a smooth claims process, Mr. and Mrs. Jenkins should gather evidence of the accident, including photos of the scene, damage to both vehicles, and witness statements if available. This documentation will be essential for their insurer to assess the claim accurately and quickly. They should also submit a claim form promptly to adhere to the insurer's reporting requirements, which typically require timely notification of the incident. Option A is incorrect because they should not make repairs until the adjuster has inspected the damage, as this may jeopardize their claim. Option C is misleading and they should not wait for the other driver to file a claim. Rather, they should report the incident to their insurer as soon as possible. Option D is incorrect. Filing a police report is generally a good practice for any accident involving injuries or significant damage and should not depend on the insistence of the other party. Question 4. A business owner, MS Taylor, has a general liability insurance policy that includes coverage C for medical payments. A customer slips and falls in her store, injuring their ankle. MS Taylor is concerned about potential lawsuits. Which of the following statements regarding coverage C is true? A. Coverage C will automatically cover all costs associated with the lawsuit, including legal fees. B. Coverage C is designed to provide coverage for medical expenses regardless of fault. C. MS Taylor must wait for a lawsuit to be filed before her insurance kicks in. D. Coverage C only applies to injuries that occur on the business premises. Answer B. Explanation. Coverage C, also known as medical payments coverage, is intended to cover medical expenses incurred by individuals injured on the insured premises without regard to fault. This means that the insurance will pay for necessary medical expenses regardless of whether MS. Taylor was negligent. Option is incorrect as coverage C only covers medical expenses, not legal fees associated with a lawsuit, which are typically covered under coverage A. Option C is misleading because coverage C is designed to respond to medical expenses immediately after the injury, not contingent on a lawsuit. Option D is partially true, however, coverage C is not strictly limited to injuries on the business premises, but typically applies to situations that occur during the insured's operations. Question 5. Mr. Adams, a warehouse owner, has a workers' compensation insurance policy. One of his employees injures their back while lifting heavy boxes. What key benefit does workers' compensation insurance provide to Mr. Adams in this scenario? A. It protects Mr. Adams from all lawsuits related to the employee's injury. B. It compensates the employee for lost wages, medical expenses, and rehabilitation costs. C. It allows Mr. Adams to dictate the employee's medical treatment options. D. It is optional for Mr. Adams as a business owner with fewer than 5 employees. Answer B. Explanation. Workers' compensation insurance is designed to provide benefits to employees who are injured on the job, covering lost wages, medical expenses, and rehabilitation costs related to the injury. This coverage is crucial because it also protects the employer, Mr. Adams, from most lawsuits stemming from work-related injuries due to the principle of exclusive remedy. Option is misleading. While workers' compensation typically limits an employer's liability, there are exceptions where lawsuits can still occur. G. Gross negligence. Option C is incorrect. Employers cannot dictate an employee's medical treatment under workers' compensation laws, which typically allow the employee to choose their medical provider from a list provided by the insurer. Option D is false. In Kansas, workers' compensation insurance is generally required for businesses with employees, regardless of the number. Question 6. During an inspection, an insurance adjuster finds that a commercial property has a significant number of safety violations. The owner, Mr. Smith, has a property insurance policy. What could be a potential consequence of these findings on Mr. Smith's insurance coverage? A. The insurance company will increase the premiums immediately. B. The insurer may deny coverage for claims related to safety violations. C. Mr. Smith will be required to pay a deductible for any claim. D. The policy will be automatically renewed without changes. Answer B. Explanation. If an insurance adjuster finds significant safety violations during an inspection, the insurance company may deny coverage for any claims that arise from those violations, citing negligence on the part of the property owner. Most insurance policies include clauses that require the insured to maintain certain safety standards. Failure to do so can result in denial of coverage. An option is not guaranteed, or while premiums might be reviewed during renewal, an immediate increase is not automatic. Option C is not relevant. Deductibles apply to specific claims but do not affect the coverage denial related to safety violations. Option D is incorrect. The insurer has the right to reevaluate the policy based on the inspection findings, which could lead to non-renewal or adjustments in coverage. Question 7. A local business has both commercial general liability (CGL) insurance and an umbrella liability insurance policy. A customer sustains injuries on the business premises and files a claim exceeding the limits of the CGL policy. What role does the umbrella liability insurance play in this situation? A. It will automatically cover the excess amount without any conditions. B. It will cover legal costs associated with the claim as long as the CGL limits have been met. C. It can only cover claims not covered by the CGL policy. D. The umbrella policy is irrelevant since the CGL policy will pay the claim. Answer B. Explanation. Umbrella liability insurance serves as an additional layer of protection that kicks in after the underlying CGL policy limits have been exhausted. In this case, if the customer's injuries result in claims that exceed the CGL limits, the umbrella policy can cover the excess amount, including associated legal costs, as long as the claim falls within the terms and conditions of the umbrella policy. Option is misleading because coverage is not automatic. It requires that the underlying CGL policy be enforced and that its limits have been reached. Option C is incorrect, as the umbrella policy can cover claims that exceed the CGL limits, but may also extend coverage to certain risks not covered by the CGL. Option D is inaccurate because the umbrella policy provides essential coverage when CGL limits are insufficient. Question 8. An insurer discovers that a business has misrepresented its operations to secure a low premium for its general liability insurance. Which of the following actions may the insurer take? A. The insurer must continue the policy as it is already in effect. B. The insurer can cancel the policy or deny a claim based on misrepresentation. C. The insurer is required to lower the premium instead. D. The insurer can only issue a warning and cannot take any punitive measures. Answer: B. Explanation. If an insurer finds that a business has misrepresented its operations, it can take several actions, including cancelling the policy or denying any claims made under the policy. Misrepresentation, particularly of material to the underwriting process, can void the contract as it indicates that the insurer was not fully informed when assessing risk. Option is incorrect that the insurer is not obligated to continue the policy if misrepresentation is found. Option C is false that the insurer cannot lower the premium retroactively if misrepresentation has occurred. Option D is misleading. Insurers are not limited to warnings that they have the right to act on misrepresentation according to the terms of the insurance contract and relevant laws. Question 9. A newly licensed insurance agent in Kansas is preparing to sell personal automobile insurance policies. Which of the following practices is critical for the agent to follow to ensure compliance with state regulations? A. Disregard continuing education requirements since they are not mandated for new agents. B. Provide a comprehensive disclosure of coverage options and limitations to clients. C. Only sell policies from one insurance company to maintain simplicity. D. Avoid discussing premium costs with clients until after they have expressed interest in a policy. Answer: B. Explanation. In Kansas, as in many states, insurance agents are required to provide clients with clear and comprehensive disclosures regarding coverage options, limitations, and exclusions of the policies being sold. This practice promotes transparency and helps consumers make informed decisions. Option is incorrect because continuing education is often mandated to maintain licensure and keep agents updated on regulatory changes and industry standards. Option C is misleading. Agents should offer clients a range of options to best meet their needs, not limit themselves to one insurer. Option D is problematic. Agents should discuss premium costs upfront as part of the sales process to ensure that clients understand the financial implications of the coverage they are considering. Question 10. Scenario-based. Mr. Johnson runs a landscaping business and has recently purchased a commercial general liability CGL policy. While working on a client's property, one of his employees accidentally damages a fence during a project. The client demands compensation for the damages. What should Mr. Johnson do in this situation to ensure proper handling of the claim? A. Pay the client out of pocket to avoid involving the insurance company. B. Contact his insurer immediately to report the incident and provide details. C. Ignore the client's demands since the damage occurred on their property. D. Attempt to negotiate the cost of repairs directly with the client without informing his insurer. Answer: B. Explanation. Mr. Johnson should contact his insurer immediately to report the incident and provide all relevant details. Prompt reporting is crucial for a smooth claims process and ensures that his insurer can investigate the matter properly. The CGL policy typically covers damages resulting from business operations, including property damage caused by employees. Option is not advisable as paying out of pocket could result in increased financial liability and complicate future claims. Option C is incorrect. Ignoring the demand can lead to legal consequences and further complications. Option D is not recommended, and negotiating directly without informing the insurer could violate the terms of the insurance contract and jeopardize coverage. Question 11. A restaurant owner has a business owner's policy BOP that includes coverage for business personal property. A fire damages the kitchen equipment. What is the maximum coverage typically provided for business personal property under BOP? A. The total value of all business personal property without limits. B. A limit specified in the policy declaration, which usually ranges from $10,000 to $500,000. C. The actual cash value of the damaged property, regardless of policy limits. D. There is no coverage for business personal property under a BOP. Answer: B. Explanation. A business owner's policy BOP generally includes coverage for business personal property up to a specified limit that is stated in the policy declaration. This limit can vary widely based on the size and type of business, typically ranging from $10,000 to $500,000 or more depending on the policy. Option is incorrect because coverage is not unlimited. Option C is misleading as the actual cash value of property may apply to the claim, but it is still subject to the limits outlined in the policy. Option D is false. B or PS are designed to provide coverage for business personal property. Question 12. Mr. Lee owns a landscaping business and has a commercial auto insurance policy. His employee is driving the company truck when they cause an accident that results in property damage to another vehicle. Which type of coverage under Mr. Lee's policy is primarily responsible for covering the damages? A. Bodily injury liability coverage. B. Property damage liability coverage. C. Collision coverage. D. Comprehensive coverage. Answer: B. Explanation. Property damage liability coverage is designed to cover damages caused by the insured vehicle to another person's property, such as damage to another vehicle in an accident. This coverage will pay for the costs associated with repairs to the damaged property up to the policy limits. Option A is incorrect. Bodily injury liability coverage applies to injuries caused to others, not property damage. Option C refers to collision coverage, which pays for damages to the insured vehicle, not damages to another person's property. Option D pertains to comprehensive coverage, which covers non-collision related incidents, e.g. theft, vandalism. Question 13. A manufacturer has an equipment breakdown insurance policy. An essential machine breaks down due to mechanical failure. Which of the following is typically excluded from coverage under this policy? A. Electrical breakdown. B. Operator error. C. External power surges. D. Normal wear and tear. Answer: D. Explanation. Equipment breakdown insurance generally covers unexpected breakdowns and malfunctions, but it typically excludes damages resulting from normal wear and tear. This is because wear and tear are considered a part of the equipment's life cycle, and insurance is not intended to cover routine maintenance issues. Option A is incorrect. Electrical breakdowns are usually covered. Option B is misleading. While operator error might complicate claims, coverage can still apply depending on the circumstances. Option C refers to power surges, which are generally covered unless specified otherwise in the policy. Question 14. MS Johnson owns a small retail store and is considering purchasing a business interruption insurance policy. What does this policy typically cover? A. The cost of physical damage to her store's structure. B. Loss of income due to a covered peril that interrupts her business operations. C. Liability claims made against her business by customers. D. Employee wages during normal business operations. Answer: B. Explanation. Business interruption insurance is designed to cover the loss of income that a business suffers due to covered peril, such as fire or natural disaster, that disrupts normal operations. It can help replace lost revenue and cover fixed costs during the period of restoration. Option is incorrect because business interruption insurance does not cover physical damage itself, rather it addresses the income lost due to that damage. Option C pertains to liability coverage, not business interruption. Option D is misleading. While some policies may allow for payroll expenses during the interruption period, this is not the primary purpose of the policy. Question 15. During a storm, a tree falls on a homeowner's garage, causing damage. The homeowner has a homeowner's insurance policy with a $1,000 deductible. If the repair costs are estimated at $5,000, how much will the insurance company pay for the claim? A. $5,000. B. $4,000. C. $1,000. D. $0. Answer: B. Explanation. In this scenario, the homeowner will need to pay the $1,000 deductible out of pocket. The insurance company will then cover the remaining amount of the repair costs. Therefore, if the repair costs are $5,000, the amount paid by the insurer after applying the deductible will be $4,000, $5,000, $1,000. Option is incorrect because it does not account for the deductible. Option C is misleading, and the deductible is what the homeowner pays, not what the insurer pays. Option D is false, so there is coverage available, so the homeowner will not receive $0. Question 16. A landlord has a property insurance policy that includes coverage for loss of rental income due to property damage. If a fire damages the property, which of the following expenses would typically NOT be covered by the policy? A. Ongoing mortgage payments. B. Costs associated with repairing the damaged property. C. Lost rental income during the repair period. D. Advertising expenses for finding new tenants. Answer: D. Explanation. Loss of rental income coverage is designed to compensate the landlord for lost income during the time the property is uninhabitable due to a covered peril, such as fire damage. However, advertising expenses incurred to find new tenants are generally not covered under this type of policy. Option A is incorrect because ongoing mortgage payments would typically be covered as part of the lost rental income. Option B is misleading. While the costs to repair the property are usually covered under the property damage aspect of the insurance, they do not fall under rental income loss. Option C is accurate, as lost rental income during the repair period is exactly what the coverage is intended to address. Question 17. An insurance agent explains the concept of subrogation to a client. Which of the following best describes subrogation? A. The insurance company pays the claim to the insured immediately after an accident. B. The right of the insurance company to pursue recovery of claim payments from a third party responsible for the loss. C. The obligation of the insured to pay a deductible before the insurer covers the claim. D. A legal process by which an insured can transfer their policy to another individual. Answer. B. Explanation. Subrogation is the legal right of an insurance company to pursue recovery of the claim amount paid to the insured from a third party that is responsible for the loss. This process allows insurers to minimize their losses and hold responsible parties accountable. Option A is incorrect. Subrogation does not pertain to the immediate payment of claims. Option C describes the deductible process, not subrogation. Option D is misleading. Subrogation does not involve transferring policies, but rather recovering costs from third parties. Question 18. A homeowner is reviewing their homeowner's insurance policy and notices a clause for replacement cost coverage. What does replacement cost coverage mean? A. The amount it would cost to rebuild the home with similar materials at current prices. B. The actual cash value of the home considering depreciation. C. A fixed amount predetermined in the policy regardless of market conditions. D. The cost of labor and materials at the time of purchase, not the time of loss. Answer A. Explanation. Replacement cost coverage means that in the event of a loss, the insurance will cover the cost to replace or rebuild the home with similar materials and construction standards at current prices without deducting for depreciation. Option B describes actual cash value, which does take depreciation into account. Option C is incorrect because replacement cost is not fixed and varies with market conditions. Option D is misleading. Replacement cost is based on current labor and material costs at the time of loss, not at the time of purchase. Question 19. An insurance broker advises a client on the importance of liability limits in a homeowner's policy. Which of the following is a potential consequence of having inadequate liability limits? A. The insurer will automatically increase the limits. B. The insured may be financially responsible for amounts exceeding the policy limits. C. The policy will not cover any liability claims at all. D. The insured is eligible for discounts on premiums. Answer. B. Explanation. If a homeowner has inadequate liability limits and faces a claim that exceeds those limits, the homeowner will be financially responsible for the amount exceeding the coverage limits. This can lead to significant out-of-pocket expenses and financial hardship. Option is incorrect. Insurers do not automatically increase limits without a request from the policyholder. Option C is misleading. While inadequate limits may not cover the full amount of a claim, the policy will still provide coverage up to its limits. Option D is false. Having lower liability limits typically does not qualify for discounts but may instead increase the risk profile of the policy. Question 20, scenario-based. The business owner, MS Taylor, is concerned about a lawsuit related to her company's products. She has product liability insurance as part of her general liability policy. If a customer claims injury from one of her products, what should MS Taylor do first after learning about the potential lawsuit? A. Ignore the claim and continue business as usual. B. Contact her insurance company to report the claim immediately. C. Settle with the customer personally to avoid further complications. D. Hire a lawyer to handle the claim without informing her insurer. Answer. B. Explanation. The first step MS Taylor should take after learning about a potential lawsuit is to contact her insurance company to report the claim immediately. This is crucial because timely reporting can affect her coverage and ensure that her insurer can provide the necessary legal support and defense if needed. Ignoring the claim, option A, could lead to negative consequences, including losing coverage or worsening the situation. Option C is not advisable, as settling personally without involving the insurer may expose her to additional financial risk and undermine her coverage. Option D is also incorrect. While hiring a lawyer may be necessary later, she should first notify her insurer so they can advise on the best course of action and manage the claim effectively. Question 21. Which of the following statements regarding the concept of negligence is true? A. Negligence requires a breach of duty that causes injury. B. Negligence applies only in criminal law. C. An insurance policy can never cover negligence. D. A plaintiff must prove intent to show negligence. Answer A. Explanation. Negligence involves a breach of duty that results in injury or damage to another party. In civil law, negligence is a basis for liability and it does not require intent. It requires demonstrating that the defendant failed to act as a reasonably prudent person would under similar circumstances. Option B is incorrect because negligence is a principle applicable in civil law. Option C is false because many insurance policies, especially liability policies, cover claims arising from negligent acts. Option D is incorrect as intent is not necessary to prove negligence. The focus is on the breach of duty and resulting harm. Question 22. In Kansas, which of the following is a primary responsibility of an employer under workers' compensation insurance? A. To provide medical treatment directly to injured employees. B. To deny claims for any injury occurring outside of work. C. To ensure that all employees are aware of their rights under the policy. D. To manage the investment of the workers' compensation funds. Answer C. Explanation. Under workers' compensation laws in Kansas, employers must inform employees of their rights and the benefits available under the policy. This includes ensuring that employees understand how to report injuries and the process for filing claims. Option is incorrect because employers typically coordinate medical care through the insurance provider. Option B is misleading, and while injuries outside of work may not be covered, the employer must still comply with applicable laws and regulations. Option D is false, as the management of workers' compensation funds is typically handled by the insurance carrier, not the employer. Question 23. Which of the following best describes the term exclusions in an insurance policy? A. Situations that are covered under the policy. B. Specific conditions or events that are not covered by the policy. C. Additional coverage options that can be purchased. D. The limits of liability for the policyholder. Answer B. Explanation. Exclusions in an insurance policy specifically identify situations, conditions, or events that are not covered by the policy. Understanding these exclusions is critical for policyholders to know what risks they remain exposed to. Option is incorrect because exclusions do not describe covered situations. Option C refers to endorsements or riders, not exclusions. Option D pertains to the maximum payout limits of the policy and does not relate to exclusions. Question 24. If a driver in Kansas has a policy that includes uninsured motorist coverage, what does this coverage provide? A. Protection against theft of the insured vehicle. B. Compensation for injuries caused by an uninsured driver. C. Coverage for damages to the insured vehicle caused by another insured driver. D. Medical payments for injuries sustained regardless of fault. Answer B. Explanation. Uninsured motorist coverage provides compensation for injuries sustained by the insured and their passengers if involved in an accident caused by a driver who does not have insurance. This coverage ensures that the insured is not left without recourse for medical expenses and lost wages when injured by an uninsured driver. Option A refers to comprehensive coverage for theft. Option C describes collision coverage, which is not related to uninsured motorist situations. Option D pertains to medical payments coverage, which is a different type of coverage. Question 25. Scenario-based. Mr. Anderson, a contractor, is facing a claim from a client who alleges that his workmanship caused damage to the client's property. Mr. Anderson has general liability insurance. What should Mr. Anderson do immediately after receiving notice of the claim? A. Admit fault and offer to pay for the damages. B. Ignore the claim as it will likely go away. C. Review the policy and contact his insurance agent to report the claim. D. Settle the matter privately with the client without involving the insurer. Answer C. Explanation. Mr. Anderson should review his general liability insurance policy and promptly contact his insurance agent to report the claim. This is essential for ensuring that his insurer is aware of the potential liability and can take the necessary steps to defend him. Option is inadvisable as admitting fault can complicate matters and affect coverage. Option B is incorrect as ignoring the claim could lead to further legal repercussions. Option D is also not advisable. Settling privately without the insurer's involvement may forfeit coverage under the policy. Question 26. Which of the following types of coverage would MOSTRKELY be included in a professional liability insurance policy for a medical professional? A. Coverage for property damage claims. B. Coverage for claims arising from professional errors or omissions. C. Coverage for theft of medical equipment. D. Coverage for general bodily injury claims. Answer: B. Explanation. Professional liability insurance, also known as errors and omissions insurance, covers claims arising from professional services provided, including errors, omissions, or negligence in those services. This type of coverage is particularly relevant for medical professionals who may face lawsuits related to their treatment decisions. Option A pertains to general liability insurance, while Option C is covered under a different policy type, property coverage. Option D also falls under general liability, not professional liability. Question 27. Which of the following statements about the Kansas Department of Insurance is true? A. It is responsible for enforcing laws and regulations related to all types of insurance. B. It only regulates health insurance policies. C. It does not have the authority to approve insurance rates. D. Its primary function is to create insurance policies for consumers. Answer A. Explanation. The Kansas Department of Insurance is responsible for enforcing laws and regulations related to various types of insurance, including property, casualty, life, and health insurance. This agency ensures that insurance companies comply with state regulations protecting consumer rights. Option B is incorrect, as the department regulates more than just health insurance. Option C is false, that the department does have the authority to approve rates for certain insurance products. Option D is incorrect, as the department does not create policies but oversees the companies that provide them. Question 20. What is the primary purpose of a claims adjuster in the insurance industry? A. To create insurance policies for consumers. B. To investigate claims and determine the insurer's liability. C. To underwrite insurance applications. D. To market insurance products to potential clients. Answer B. Explanation. The primary purpose of a claims adjuster is to investigate claims made by policyholders to determine the insurer's liability and the amount of compensation owed. Adjusters gather facts, evaluate evidence, and make recommendations for claim settlements. Option is incorrect. Policy creation is typically handled by underwriters. Option C relates to the underwriting process, not claims adjustment. Option D is focused on marketing, which is not within the adjuster's role. Question 29. In the context of casualty insurance, what does a liability generally refer to? A. The amount of premiums paid for coverage. B. The legal responsibility for causing harm or damage to another party. C. The limit of coverage provided under an insurance policy. D. The process of managing risk in an organization. Answer B. Explanation. In casualty insurance, liability refers to the legal responsibility of an individual or entity for causing harm or damage to another party, which can lead to claims and lawsuits. Understanding liability is essential for determining coverage needs and the extent of risk exposure. Option A pertains to premiums, which are not directly related to liability. Option C refers to policy limits rather than liability itself. Option D relates to risk management, which is a broader concept. Question 30. Which of the following is considered a primary method of risk management? A. Risk retention. B. Risk transfer. C. Risk avoidance. D. All of the above. Answer D. Explanation. All the options listed, risk retention, risk transfer, and risk avoidance, are recognized methods of risk management. Risk retention involves accepting the risk when the potential costs are manageable. Risk transfer entails shifting the risk to another party, such as purchasing insurance. Risk avoidance involves eliminating the risk entirely by changing behavior or practices. Each method has its place in a comprehensive risk management strategy, and understanding how to apply them is critical in the field of casualty insurance.